Hello everyone. This is the pre-market report video for today, 22nd December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. On Wednesday, we know Nifty dropped 300 points and in that yesterday it recovered more than 100 points with the help of energy sector. As the whole sector, it increased 1.77%. Yesterday, before our market hours, Bloomberg released the report that over 5 million barrels of oil from Russia that are set to reach India in November is waiting in the sea. Some in Sri Lanka and some around India's neighboring countries are idle in the ocean. The main purpose of this stall is due to the US price cap issue, $60 per barrel. And hence, S&P Global's India head said, at present, India is getting the oil from Russia at the discount price of around $4 to $6 per barrel, and that discount price expect to increase over $10 to $12 per barrel. We know at present the windfall tax on crude oil product and diesel export reduced heavily, which we discussed in detail on Tuesday pre-market video. So if this discount increases to $10 to $12 per barrel means, then this will improve the gross refining margin heavily. Hence, yesterday all the oil refining companies were crazy positive. In fact, BPCL was the top Nifty gainer as it increased over 3%. So does the Reliance as well. Just for info, at present, 1/3 of the diesel total consumption in Europe is imported from India, and in that around 60% is from Reliance Industries alone. Anyway, regarding Nifty's positive contribution, both Reliance and HDFC Bank alone contributed for 75 points out of 100 points positive close. Moving on, about institution, FII net sold for 1,640 crore rupees and DII net bought for 1,460 crore rupees. And one more thing, how on Wednesday only Indian market was trading in negative and all European market was positive. In direct contrary to that, yesterday afternoon only Indian market was trading positive. All other European markets major index all traded in negative and closed negative. Then coming to US, even in the last pre-market video we discussed this, the Wednesday drop in US is nothing to do with fundamentals. Rather, it's related to option hedging issue due to delta exposure. Last night, even Reuters highlighted the same. So fundamentally, US market is still bullish. In addition to that, before the US market opening, US government released their final Q3 GDP growth rate. The data came as 4.9%, which is less than the second estimate 5.2%. However, it was above last Q2 quarter and last year Q3, which was just 2.1% and 3.2% respectively. So, 4.9% GDP growth rate for the larger economy like US is really very positive. Second, last night US government released core PCE prices. Here, please note not November month PCE inflation, rather it's PCE prices for the whole Q3 quarter. To some extent, it will influence the tonight PCE inflation data. Anyway, the data came as just 2% against expectation of 2.3% and it is way less compared to previous quarter 3.7%. Again, this macro also really very good one. So on quarterly basis, the prices increased only 2%, which is the exact Fed target. Their target is for only monthly basis, but still this is very good data. Because of this two good macro data, which in turn pushed the 10-year bond yield down to around 3.83%, which is the lowest value in the last 4 months. Because of all this positivity, US market opened positive. And then semiconductor company called Micron Technology posted a better than expected quarterly results. So that stock price increased over 8.5%. Which in turn made the semiconductor index to increase 2.8%. So does influenced the Nasdaq. This added additional positivity in all three US major index. Thus, in the end, Dow Jones increased 0.87%, S&P 500 up by 1.03% and Nasdaq up by 1.26%. In case of VIX, it's same around 13.5. Regarding oil, it's also the same. At the time of this video, Brent crude is trading around $79 per barrel and WTI crude is trading just below $74 per barrel. Coming to Indian ADR, only Infosys closed marginally negative. All other three closed positive, especially HDFC Bank increased over 1.5%. Here, if we calculate the arbitrage difference to Indian spot market, then except HDFC Bank, all others trading near flatline. So, I'm guessing ADRs now lags the Indian market rather than leading. Then about GIFT Nifty, today early morning, in line with the US market, it increased and closed at 21,425. Hence, considering the premium 50 points, it's indicating the gap up opening of 100 to 125 points. So that's what happened in the global market. Now let's see the India specific information. There are just couple. First, regarding the bank liquidity issue, if required, please pause and have a look. The graph shows the history of liquidity deficit in the Indian banking system. As we see here, the present deficit is over 2 lakh crore rupees, which is the highest in the last 8 years. We know on last Friday, RBI conducted the short VRR auction for 1 lakh crore rupees to fix this issue. But even Monday we discussed this, that was not enough. Now, yesterday RBI said again today they are going to conduct another VRR auction. Here I forgot the exact auction amount, but I'm guessing it's for 1.7 lakh crore rupees. Anyway, this time we can consider this as positive. Since India Rating Agency released the report, the bank liquidity problem will go away in January as they expect government to increase their spending. Thus, we can see its impact on banking stocks. Second, regarding LIC, at present there is some nervousness among investors to invest in their stock since government is holding over 90% and as per SEBI's rule, they have to reduce that holding to below 75% within the listing of 3 years. Which is the huge concern since diluting the shares will impact the price heavily. However, yesterday evening, Department of Economic Affairs gave an exemption for LIC for 10 years to reach the threshold, which means they don't have to liquidate by 2025, rather they got the time till 2032. I generally consider this as very positive. Let's see. As a summary, global momentum and US market also turned positive now, and for the moment, GIFT Nifty is indicating the gap up opening of another 100 to 125 points. So, out of 300 points loss in Wednesday, by combining yesterday and today, it might recover above 200 points. Let's hope for it. Moving on, yesterday as per stock open interest, City Union Bank, Marico, ICICI Bank, Dauber, Bata India, Axis Bank and Bandhan Bank got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Coromandel International, Hindustan Copper, Britannia Industries, IRCTC, REC, PFC and GMR Airports Infra got an increase in open interest with a positive price close indicating the long build-up. About the things to look out. At present, just now, Japanese inflation comes in line with the expectation, so there is a chance Asian market might react to that. It's literally just released now. Then, during our market hours at 12:30 p.m., UK's retail sales data and GDP growth rate is scheduled to release. And in the aftermarket hours, first at 5 p.m., RBI's last MPC meeting minutes, and for US market, very important, PC inflation for November month. Then personal spending, building permits, new home sales data and Michigan consumer sentiment data are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened 110 points gap down and broke the 21,000 level, but soon it started to recover and traded comfortably above 21,200 for rest of the day. Thus, on the daily chart, it formed a strong bullish candle but smaller than Wednesday one. And virtually, yesterday's candle filled the large gap up that was formed on 14th December, 20,950 to 21,074, which indicates the strong support base. Then now Nifty closed above its 10-day moving average, signaling positive momentum. While on the higher side, the Fibonacci pivot point resistance is at 21,470. Then in case of Bank Nifty, similar to Nifty, it also started on a negative note with 270 points gap down, but recovered as the day progressed. In the end, closed near 400 points positive. Thus, on the daily chart, it also formed a strong bullish candle. On the downside, Bank Nifty took the support at 46,900 and closed above the immediate resistance 10-day moving average 47,500, which in turn highlighting its strength. So now the immediate support is at 47,500 and the crucial support is at 46,900. So as long as it holds these levels, Bank Nifty expects to resume its upward movement towards 48,200. Thus the overall trend is positive while 48,000 acts as the initial resistance. Then, as per the options open interest data, the maximum call option open interest was at 22,000 strike, followed by 21,500 and 21,600, with new maximum call option writing at 22,000 strike, followed by 22,500 and 22,200 strike. Thus, from options data for the next week monthly expiry, 22,000 is the strong resistance. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 20,000 and 20,500, with new put option writing at 21,000 strike, then 20,000 and 20,800. Hence, the immediate support zone from options data is 21,000 to 20,800 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.